Hello everyone, and welcome to our market alert video for today, which is August 8, 2025. Thank you so much for watching. I hope this video finds you healthy, wealthy, and wise. I am Ken Moraif. I'm the CEO and founder of Retirement Planners of America. And as the name implies, we specialize in the most wonderful thing in the whole world, and that is helping people to retire when they want to, and then to stay retired once they've done that. And so that's our goal in life, and we have a lot to talk about this week. And there isn't any major financial data, economic data to hang our hat on for this week's Market Alert video. So what I thought we would do is kind of look back on the jobs numbers. First of all, before we do that, and I know this is supposed to be financial and all that, but I just want to share a tip with everybody. And this tip is on if you're really, instead of Ozempic and all this stuff that helps you to lose weight, what you need to do is have a colonoscopy. Let me tell you, I lost 6 pounds in 2 days.
The great equalizer. That's pretty good.
Oh my gosh.
It's a reset.
It's like you step on the scale and you're like, wow, I lost 6 pounds. That's incredible. Now the job is like not to eat anymore, so I keep it off, right?
You feel good for a sec.
So that's my tip for you, ladies and gentlemen, if you want to lose weight. So anyway, one of the things that it struck me is that the jobs numbers, there seems to be no conversation as to the impact of AI on the jobs numbers. And what made me think that is I met with the son of a client who's interested in becoming a client. And he was telling me, he's 50 years old. He works for a very large company, very famous company that I won't name. And he said, he just got laid off along with the 70 people that reported to him. They were all coders and, they were in the tech part of the company. They all got laid off, 70 people, and AI is doing their job now. And he said, I'm looking for a new job, and what I'm finding is that other companies are doing the same thing. So it's like my job has almost been eliminated from the economy. And so I thought that we could look at, the jobs and the impact that they will have, or rather AI and the impact it will have on jobs. And should we care, as terrible as that sounds, given that really what drives stock prices is profits. So I'm going to bring Jordan Roach, our Chief Investment Officer, into the conversation. Jordan, good to see you.
Good to be here again, as always.
Yes, good to see you. So we disagree a little bit on this one, I think, kind of in general. Mm-hmm. And so I want to tell a story, just to kind of set the stage. Okay. All right. So this is the story of an island in the Pacific.
Lovely.
And this island, the husbands go out and they do their fishing. They fish to feed their families. Okay. And they bring the fish home and the wives clean it up and all that. And I know that was sexist, but this is a sexist island. Okay, so the husbands are out there doing that. And one day, one of the fishermen says, you know what, I am sick and tired of having to go fishing every day to feed my family. So he invents the net. And what he does is he goes out and in 1 hour he catches enough fish, not just to feed his own family, but to feed the entire island. So now let's examine the island. What just happened? Well, first of all, if they have such an abundance of fish now that there's like 90% unemployment on the island.
Okay.
All right? So it's like everybody's lost their jobs. We don't need fishermen anymore. And and if we measure the value of this island, right, on its gross domestic product, which is fish, well, it's got way more fish now than it did before. So the island itself is far more valuable than it was before.
Sure.
But it's got 90% unemployment.
Okay.
So is that what's going to happen to our economy? Are we going to see AI causing mass unemployment and companies are going to be making so much money that their stock prices are going to go through the roof and investors are going to be celebrating and workers are going to be unemployed?
So you're good at this, right? You think in concepts and stories. I think in data, right?
Okay,
so we kind of go between the two. So in this, I think you're right. The value of that island to an outsider, right? So for the islanders that are maybe across the channel, that island looks like they want to be there now, right? So its value goes up, right? Its output, its production is higher than what it was, and it's doing it for cheaper. So that's right for takeover. My issue would be with those islanders, though, all those new fish, they can't buy their own fish now. They don't have any money. And how long does it take to spin up to where they can actually go get the new fish?
Well, what's going to happen is the guy with all the fish, right? He's got all these fish now. He's got this huge, valuable product, right?
He does.
So now he needs to fillet them, and he needs to cook them, and he's going to start hiring all these other people to be like his chef and his filleter. And then he's going to need somebody to import it to all the other islands, because now he's got so much fish that he could get it to them for cheaper than it costs them to go fishing every day. So now he's going to put everybody else over there unemployed too, because he starts selling fish to them for less than they can do it over there. So now you got unemployment on the other islands.
So maybe structurally, long term, we get to that place, right? Some efficiencies, some new jobs. The question would be, to me, are those 90%, are they all getting a new job, right? So every one of them, unemployment ticks up, and then we find a settling period in equilibrium where there's new jobs to support all of them, their livelihoods, and all is good. Or is there a point where, we create a lot of new jobs that didn't exist, but some people are still unemployed, right? Some people, we don't have enough jobs. And so we just see the average unemployment rate just kind of move higher. Now, we've seen this historically. Like right now, we're at 4.2% unemployment, plus or minus. I think historically our economy has grown pretty well when it moves even all the way up to low sixes. Past that, we have problems.
Right, but I mean, what I'm saying is that I can see a world where we have 10% unemployment, 15% unemployment because of AI. All these robots and machines, they're going to start taking jobs away from, and it's going to accelerate. And I can also see, while that's happening, the stock market setting new all-time highs left and right. I mean, let me give you another example. Let's say Walmart tomorrow figures out how to automate their entire store. They don't need any people anymore. And they let go however many hundreds of thousands of people they employ. Okay, so if they do that, the unemployment rate goes to 6% just from Walmart. But what's going to happen to Walmart's stock price? Holy cow. Their profits are going to skyrocket. The most expensive thing they have is their people, right? So all of a sudden, they're making money hand over fist.
Yeah, so I think then it's timeline of who wins out. So I think short term, to me, profitability wins with the market, generally speaking, right? They're going to look at, all right, we're going to come into, Q3 earnings, and Walmart's going to post a huge profit. The market's going to know what it's coming from.
Microsoft.
Okay, Microsoft's done this.
They just did that.
Right, they do this. That's good. But then you also have the other side to say, okay, that's good short term, but at what point, if this happens at the same time across multiple industries, I think market has a problem with 10% unemployment.
So what you're saying is, what if nobody has a job and they can't buy anything that all the machines are making?
I think there's a point where you go, it tips not, it's productive for that company to do it. Maybe that one, maybe this 15. But at some point, too many companies are doing it at the same time. Unemployment comes up, and now that goes into the purchasing power, consumption for the consumer. Because we've talked about, like, it's a balance between profitability at the company level and then the consumer on the other end to buy those goods. Right. If you get an imbalance there, then we have problems.
Right. So yes, initially huge profits.
Yep.
But if consumers don't have jobs, they can't buy anything anymore, and those profits will come down.
I think so. And how does the market weigh it? Because then you have people like me that if I'm seeing reports posted of 10% unemployment or jobless claims tick up huge, I'm going to start clicking the sell button ahead of time. I am. And I think I'm not the only one out there that's running money. So it's going to be interesting. I think short term, probably good for profitability. Maybe long term, the economy can reset to find its footing, right, in this kind of new paradigm where AI is a big player. I mean, again, we've seen this happen throughout U.S. or even world history, where we go from a manufacturing economy to a service economy. And we actually see, like today, manufacturing output is the same as it was 70 years ago in real terms. It's just,
right, but it's robots that are doing it.
But it takes less people to do it. And those jobs, you find jobs elsewhere. So I think long term, it's probably okay for large parts. My issue is, how do we get from today, this year, to where it looks in 10 years?
I'll tell you something interesting about this young man.
Okay.
You know what he's doing? He started a landscape company.
Okay, AI is not hitting that yet.
So AI hasn't hit landscape.
Yeah.
So it's kind of a weird thing where it used to be you don't want to be like a trade person, right? You want to go into technology and into coding and be a software engineer and whatever. And now it's the opposite. It's like you're a software engineer. Your AI is coming for you. You need to be a plumber. You need to be a landscaper.
Really
you need to be a carpenter, because those, at least for now, the robots haven't taken those jobs away.
It is interesting. Like
so it's got to reverse.
It is reversing. And it's like the sectors and industry that are creating the AI machine is the industry that actually is eating itself, right? It's like all these coders that are actually making this happen, and then they're the ones that are going to have to find new jobs short term.
So let's bring this back into the realm of
what we do.
What we do, okay. Right? So, which is retirement planning, right? So we work with people over 50 who are retired or retiring soon. So I guess the theme today is that the unemployment numbers are not necessarily what you should be looking at in terms of what the stock market's going to do or what your investments are going to do. Because in the short term, it actually may be a reflection of companies becoming more efficient and more productive by using AI and laying people off and their profits going up.
Yes.
So at least for the rest of this year, AI shouldn't take over by December.
Yeah.
So
it is moving fast, but not by December, right?
Yeah, by December. Yeah. So by the end of this year, we're still very bullish about where we go from here. And, in fact, companies like Salesforce and Microsoft and others, they're laying off thousands of people, and they're becoming more profitable, and their stock prices are going up, and that's driving the market. So we're optimistic about where we go from here in the future. Now, the thing that we always talk about, because we work with people who are over 50, who are retired or retiring soon, is the most important decade of your entire financial life, in our view, is the 5 years before you retire and the 5 years after you retire. So if you're in that decade, if you take large losses in your investment portfolio, you may not be able to retire when you want to, or you may not be able to sustain the lifestyle that you want to during your retirement. So in our world, we have a strategy we call Invest and Protect.
Yes.
And I've said this before, but it bears repeating. The old expression is that if you don't toot your own horn, nobody else will. There aren't any horn tooters out there.
They're not. No.
And so, in November of 2007, our strategy said to sell, and we had our clients out for the entire credit crisis when the S&P went down 57% from peak to trough.
Yes.
You still work with clients. Imagine the conversation you would have with a client if they had lost 57% of their money.
Cannot imagine.
And they want to retire in like 6 months.
I could not fathom that conversation of somebody walking into my office with that, pulling up their statement, thinking everything's being undone. Their whole world's turned upside down, effectively.
Yeah. And I remember back in 2008, we met with people that happened to them, and it was crushing. I mean, it was palpable, the pain that they were in. It was truly just horrible. So having a strategy to address big bad losses, we think is super important. That's one thing that we do. And I encourage you, ladies and gentlemen, we did a podcast on our strategy of Invest and Protect. And so you should watch that if you're curious. Or better yet, visit with one of our retirement planners. Now, I want to address something that in the comments section of our last or one of our podcasts, somebody said, Ken, you talk about diversification, you talk about this and that, Now, most other people don't talk about protecting your principal and having an invest and protect strategy. So I'll disagree with that comment from that perspective. But the rest of the stuff, it's not different. There's no magic bullets in investing. Diversification, and risk tolerance and all those kind of things. And he said, why would I go with you versus going with Fisher or Allworth? And that's a fantastic question. And I guess the answer that I would give there is, I'm an avid tennis player. I've been playing tennis for 58 years. So I've had lots of surgeries, and my elbow I've done twice. I go to an elbow surgeon when I need elbow surgery. I don't go to a dermatologist or a general practitioner. I don't do that. And so what makes us different is that, if you're over 50 and you're in that decade, that's where we specialize. Our people are trained in retirement planning. They're trained in budgeting for retirement. They're trained in 401k planning, in Medicare, Social Security strategies, income taxes, given Social Security, given Medicare, given that you're now retiring, all those kind of things. That's what we specialize in. So I guess the answer to the person saying the comment, I have a friend, why would they come to you versus Fisher or Allworth? I would say that if they're in that decade, if they're over 50, they should come to us because that's what we specialize in. If they're not in that decade and they're not over 50, then probably Fisher and Allworth would be a better bet for them. So I would say it's just a matter of specialization and where do you want to go. And, when I have a situation that's important to me in my life, I want to talk to people that's all they do. They're trained in that, they specialize in that, and that's all they do. And that's been you for the last 8 years, right? Since you've been with us.
Yeah, and I, to say to your point, I think there is a difference. I mean, I worked in this business for quite a while prior to coming here, and felt like I was a pretty good planner and pretty, knowledgeable. But I would say it was way more generalist than when I got here to have to pick up all the distribution techniques and Social Security planning and Medicare planning and all those things. So I think that does matter at the end of the day.
It's a paradigm shift. When you're getting ready to retire, you have to start thinking in a completely different way than you thought about when you built what you built to get to that point. Mm-hmm. And now it's a shift, right? You're going to be taking income. You're not going to have wages. You got all kinds of decisions to make. And if I'm you, I would want to talk to somebody who specializes in that, not a generalist. Yep. So I hope that answers the comment. So, ladies and gentlemen, I want to thank you guys just immensely. We had this is a crazy stat. We had a 1,000% increase in subscribers last month to our podcast. Thank you. 1 million views over the last year. Over that's mind-blowing to me. Thank you. I hope these videos help you a lot. Watch our podcast, subscribe, and get those downloaded to your devices. And I hope this video finds you healthy, wealthy, and wise. And we'll talk soon. People are always asking me, we watch your Market Alert videos, we listen to your podcasts, and we want to get a hold of one of your retirement planners to help us to build our plan. And how would we do that? Well, you know what? It's simple. All you have to do is go to our website. It's RPOA.com. And when you're there, click on Meet with an Advisor. And if you do that, we'll build a plan for you at no charge or obligation. And if you like what you see and you want to work with us, that's fantastic. And if not, that's fine too. Either way, we will part friends. So take advantage of that. It's at RPOA.com.
Retirement Planners of America, RPOA.com.